back to my YouTube channel, Elliott Wave Principal. I'm your host, Shaheen. And then today we are going to talk about silver and then we'll discuss gold as well. But what nobody was talking about, silver is a very significant thing, and that we have broken out of almost 45 years of price range. And the last top that we had seen, and then after that, that was about 45 years ago, and after that, we had seen a double top happening and back in 2010, 2011, and now recently last year we actually went beyond that, and right now we hardly have done close to the end of March, that is the first quarter of 2026, and we are now close to retesting the previous resistance. The main important thing is that you don't have to be a very advanced learner of technical analysis to know that something significant has happened, and we are definitely going to go. It's one of the simplest settings, one of the simplest setting where we can tell that silver is definitely going to go to the new highs further up. Right now it's going through a correctional phase. We can see that on weekly time frame. I'll draw that, but I wanted to show you this yearly chart to give you what exactly has happened. So we have first came down and then went up and created a double top with it, came down back again, and then created a cup pattern, and there was no handle right over here. So instead of creating a handle pattern, which I would show you, we have, I think, GDXJ, where we have seen handle pattern being formed. But most of these gold and silver stocks didn't even create the handle pattern, and they straight away went through it. And right now we are kind of forming the correctional pattern. I don't think so. The prices are going to come back all the way to over here. Reason is because on a smaller time frame, when prices are so strong, you don't get to see the whole completion of and the pattern that normally happens. So you got to keep an eye. This is one of the one once again, this is one of the most simplest pattern that you're going to see, that we have a range that's almost back going to around 1990, 1980, sorry, and there was taken over last year. Not only it was taken over in the initial part of the in the first quarter of the 2026, we went way beyond it, right? And then right now we are testing the support, the correctional pattern as well. So this is the main theme of the today's video. You don't have to be a very well versed in Elliott wave analysis or technical analysis. This is one of the most important trading setup for gold and silver. Gold is not itself is not showing this exactly pattern, but some of the gold stocks or miners are actually showing a cup pattern, and then prices have gone beyond and retesting the previous support, previous resistance right over here. So this is significant. We are definitely waiting towards a strong bullish move in gold and silver, but silver is more important. Reason because I think silver is definitely heading towards at least around 500 bucks per ounce, because I did some calculations and I thought gold is expected to be closing around $10,000. And then if normally what happens is silver creates a ratio of 1:20, or 1:18:19. Let's call it 1:20 for the ratio of gold and silver. In that case, if gold hits $10,000 and then silver will hit around $500, it would be maybe a bit less, maybe a little more, but I think $500 per ounce is reasonable mark right at the moment for silver. It's not a hype that I'm giving you. It has happened. If you have traded commodities before, you will realize that commodities strictly go beyond the ranges that they create normally for a very long period of time, and then they break through the range. They create a very strong top beyond the range, and after that, strong reversals also happen. So it's very important, first of all, for us to understand that we are anticipating a bullish market in the continuation of bullish market in gold and silver, but we are also anticipating that as soon as the top is occurs, a sharp decline is expected after that too. I'm going to switch over to the weekly time frame so we can see actually exactly what's expected to happen on a smaller time frame analysis. This is the weekly chart, and I want so traditionally, what happens is that you see a larger leg followed by a correction, and then you see kind of the leg close to be somewhere around here. But if you look at silver, if you look at gold, then we are anticipating that a reversal is possible. okay, that we can simply go from over here. Because the reason, first of all, we have already come around 50% of the top right over here. If you make a 50% of the top, then that brings us back to around $60, and we have hit it. This is the most ideal time if you look at Fibonacci analysis, or if you look at percentage analysis. We have already found a support of it, and then we had a positive weekly bar on it. So I'm pretty positive that we are very close to the completion of the bottom right over here. I'm not anticipating for the run of price movement further down, even to retest $50 or something. A lot of people, retail traders, probably are going to wait for the prices to come back all the way. But you got to understand that right now we are on a 50% of the top right over here. And let's have a look, and I'm going to undo it right over here. And I also wanted to show you once again, it's basically a cup, and um, this cup pattern right over here, once again on a weekly time frame, prices went beyond it and corrected it. As far as Elliott wave analysis is concerned, I'm considering this whole price movement as wave 1 and 2, wave 3 and 4 and 5. A lot of you guys are going to look at it. It says normally stocks follow 5-3 structure. So what's this ABC structure? This A, B, and C structure. And this normally happens in commodities. So a lot of commodities normally follow an ABC structure over large cycles instead of following a 5-3-5 structure, or just 5-3 structure. So with commodities, we are looking at 5-3-5 structure. I do believe that we have completed wave A back in 2010-11, and then we had completed wave B at this low point, and this point from this on, we are expecting for a 5-wave structure to complete. Another important structure characteristic of commodities is that normally the fifth wave is the longest wave, and hence the labeling is like this: wave 1, 2, 3, 4. Right now we are very close to the completion of 4, and then I am anticipating that wave 5 is going to be further subdivisible. We are going to see some subdivisions in wave 5, and it is going to be the longest wave. Once that is complete, I'm anticipating that probably will fall back close to the previous top right over here around $50. So $50 is very good. 60 $50 $60 range is very good, even if you're looking for buying for a very long period of time. Let's say you don't want to, you're a young man and you want to hold it for the rest of your life, then you can certainly do so. But if you are middle-aged, you are definitely waiting for at a juncture where you can make a lot of money in a shorter period of time. Now this move that I have, almost a vertical line, it happened in a short, very short interval of time. I am anticipating that we are going to see the top either close to the end of 2026 or maybe the early part of 2027. So if you stay tuned to me, I'm definitely towards, when I see that I'm heading towards the close, the prices are heading towards the end of the whole move. We are going to start giving special videos or special analysis. If you want, you can join us in that regard too. But as far as general content is concerned, I'm anticipating it to be very strong move, close to be happening towards the end of 2026 or maybe the earlier part of 2027. Pretty interesting to see. And simple is that we 1, 2, 3, 4, and we are anticipating for the prices to go up. We'll go now look at a daily time frame and see how daily time frame is showing up on the thing. One pretty interesting thing you can do definitely is that if you draw a simple percentage from the top right over here, right? And then you can see this is around 121.75, and the bottom came around 61 something. So we are very close to the around 50%. 50% would be somewhere around, I guess, over here, right? So this is very good. This is very good as far as buying is concerned. Let me have a look. And I just wanted to show you the flag pattern right over here. Just give me a moment, and so that I can simply go and coordinates here. I just want to show quickly go and draw this percentage tool here. So 1, 2, 3, 4. This exactly set at 50%. Okay, because the low is at 0 and the high is at 121.90. So we are exactly sitting it here. We can further find more support zones right over here by dividing it even further in subdivisions. We can divide each part by 2, and then we'll see even more interesting pattern right over here. You can find some additional support and resistance here using even more subdivisions of it by dividing furthermore to another 4 equal divisions right over here. If you want, you can study it. Let's have a look at what I'm anticipating right now. I think 4 hourly. I want to see show the move. Right. So I think we might have created a bottom right over here. The price is not going back further down as compared to this one, but the correction is not done. That actually started from over here. Okay. I'm talking about a very small time frame. That's 4 hourly right now to find a better trading setup. Let's go once again and to hourly trading setup. Yeah, so I am anticipating that the correction is yet not complete. This directly started from over here. So we can actually go and do this. Okay. This is not exactly a measuring tool. What it tells you that this is an impulsive wave followed by a corrective pattern. Okay. All that's all it is saying. And within the corrective pattern, we have completed first leg followed by another leg, and we are expecting for the prices to come back down. So prices can come down and create a bottom around this support, or they can come around in this section here as well. But I'm expecting for the prices to fall back right over here, and on a small time frame, this will give us a buying opportunity. Since we already have support zones right over here, we can simply go ahead and we can use that exactly same support zones. We don't have to draw. Once you use that, you realize that we found two resistance points very clearly. First of all, going upward, we found a resistance at 5 by 8 and then 7 by 8. All right. Similarly, coming down, we have 1, 2, 3, 4, and then going up about 3. So let's call it that 1, 2, 3, 4 boxes are going to happen on the downward in that case. 1, 2, 3, and 4. So we are expecting for the prices to come down over here. It's not an exact measurement, as I said, but it will give you a tool to my an idea that okay, yeah, we are finding support right over here. Now, if you do find a support right over here, once again, that will also tell you that we are kind of at the finding support at the 25% of this larger range. Okay, because this is 1 by 4 of the larger range that we have right over here, and you know where the whole cell is coming from, right? So you can play with it and see what exactly fits in. As far as Elliott wave analysis is concerned, I think we have seen a bottom right over here. We can start considering it as wave 1 and wave 2, and then once this happens on, I think that should be done and over with on Monday, and from Tuesday we are going to expect for the prices to carry on towards more bullish pattern. Okay, let's have a look at GDX and GDXJ before I could show you where exactly silver is, sorry, gold is headed. And I wanted to show you the reason is because we have all sorts of charts in gold and silver miners. This is an ETF for gold and silver mining companies, and this is for seniors. This is not a junior mining uh, companies ETF. For juniors, we have GDXJ. We'll look into it in a bit. I wanted to point out simple pattern that we back in 2010 we created 10, oh sorry, 11. I keep on saying 10. 2011 we created a top. We came back. We kind of form a cup pattern. Instead of forming a handle right over here, prices have actually gone beyond and right now retesting the resistance right over here. Do understand that on a very small time frame we did get retested. So I'm not expecting once again for the prices to fall back all the right over here. I think that we are done. We are very close to the completion once again. And if you look at it right now, the prices right over here was 80 and the top was close to 120-ish. So we are kind of close to one third. We are finding support at one third. Once again, using the simple tool of it, we can find the top right over here and we can draw it back to the zero. Okay. And by going so, we can see that here's the setting. So we can draw that the lower price bar is to be at zero. Now are basically drawing the range between 0 and 117.4. Okay, so between 0 and the most recent high. Once we do that, let's see what we happen. Now, definitely we have not finding support at 8. So another measure to do is let can we have find support at 9 by creating a 9 equal divisions, and then you can see that we have found support at 1 by 3 of the whole range. So it kind of gives you an extra um, indication, a tool that, yeah, we are close to a mathematical resistance or support point, and then there is a possibility that we can go for the prices to go over here. Once this scale is set, you can definitely set it and keep it for the future and see if the price levels are coming handy. Okay, so we go on um, daily time frame to see what's happening. Now, one interesting thing is you probably are seeing is, first of all, is that this low is also close to the 1 by 9 area. Okay, and then the second happens. So a higher low is occurring also a mathematical point. Okay, so let's keep that in mind. And I want to see if we have some. There we are. Okay. From the bottom, we're not measuring the thing. We are measuring from the bottom of this because this is supposed to be a. And once we do that, this is 8 equal divisions. Since we started with 9, so we'll carry on with 9, okay? But we don't find a sub resistance at 9. So right now we can see that we can use 8 within the 9 larger division. And I think once again is that there is a possibility with, especially with gold miner ETF, could it be possible that the prices come down and create a low right over here? There is certainly a possibility, but I think that we have can easily start taking it as an impulsive wave followed by a corrective wave. So we can go on a 50-minute chart to see even better pattern. Okay. So I think Monday we can see this behavior and then we can continue on this one. Okay. So once we see the prices coming down, we can definitely draw a side channel or a parallel channel right over here. And once the prices fall back, we don't have to go long right over here. We can wait for the prices for the break of the top line, or we can wait for the prices for the this horizontal resistance, or once again this horizontal resistance is your personal choice, but it gives you kind of what you are looking at in terms of prices. Are you going with the trend, or you are going against the trend? All right. If you are going long at this point, you are definitely going with the momentum that is not as strong as for a larger move, but on a smaller time frame, it definitely is in your favor. So once again, we are very close to the creating a bottom in GDX, and I think GDXJ is also similar. So I'm not similar, but we are definitely seeing some corrective pattern. The larger pattern is exactly not the same. Let's have go. We'll just have a quick look at it, and then we'll move on into gold. Okay. So with this one, I think what you are seeing is that the actual cup and the handle pattern, all right? So if you look at it, this is the actual cup and the handle. Hence, because this is the juniors, the patterns are not as strong as we are seeing in the seniors and gold and silver itself. So this is kind of giving you indication of how one single pattern can evolve into a different pattern through the similar class of the markets. Okay, because they are the same group, gold, silver, and gold and silver miners. The important part that we want to discuss right now is gold, because gold has surprised a lot of people, especially with the recent correction, and people are not sure where exactly it's happening. So once again, on a larger correction, if you look at gold, we found a bottom somewhere close to I think year 2000, and then prices went up, came down, and then going up again. Larger pattern once again, as far as Elliott wave analysis is concerned, I'm considering this whole pattern to be A, wave B, and then wave C right over here. Okay. So within wave C, we have completed one, two, three, four right over here. And not only we have completed wave 4, but we have also completed earlier part of wave 5 as well. So I believe that we have completed wave 1, 2, 3, 4 of the wave 5 as well already, and we have all left is wave 5 of 5. Okay, so the labeling between gold and silver is slightly different as far as because gold has already made its move and the other hasn't made its move yet. So we can go back on a daily time frame. And here's the labeling if you are interested in seeing labeling, what I'm anticipating in terms of. So I'm seeing that the first resistance could be around close to 6,500-ish. And then we shall see prices coming, forming a correction. The next close to around $8,000 correction. And then we are probably seeing, or maybe not $8,000, we can definitely bring it back a little lower and then somewhere close to around this one could easily be from 9,000 to 11,000 range, anything in between there as well possible for gold to create a top. One thing I wanted to show on a smaller time frame, because if you look at the correction, it's more uh, kind of proportional, it doesn't look as ugly as what we are seeing in silver. Okay, so I'm talking about this one. So all I'm going to do is trying to go and create if is following a parallel channel or not. So we can simply go ahead and extend it to the right over here. So it gives you an idea where we are right now. So we are finding support at lower end. Prices have definitely gone up. Prices have found resistance close to the halfway of the range, on the diagonal range. And then as soon as prices going up, we have sharply come down, gone up, and I think that we haven't completed the pattern as well. So we can go back at a hourly time frame and we can see what is possible. I'm sensing that the correctional pattern is yet not complete. A lot of you are looking at an ABC expanded flat correction. I think that is not the whole story. Let me delete this and we can definitely look at this as an A, B, and C. But the prices are already struggling right over here. They are not moving beyond that point easily. So I'm thinking that this whole move is wave one. It's not exactly all theoretical five-wave structure, but from this bottom, it does happen. If you are an electrician, you will see that sometimes the price shape is not really ideal. So from this point, I'm considering this as wave one, A, B, and C. That will be completing the correction. Once if this is not the case and prices go beyond that, this is also a possibility that we shall keep in mind. So I'm expecting this to happen. The alternate count is that prices have completed a bottom right over here, and this is wave 1, A, B, and C. In that case, prices shall continue beyond this top. Either way, the larger trend I think is bullish in gold and silver. So we are very close to the bottom in silver. We are very close to the bottom in gold. I won't be as picky as I said. If you keep focus on being very close and picky, it's not gonna help you. Trading is for trading is concerned. We can definitely do. I'm gonna delete this. If you're interested, we can definitely go. I think the video is already long enough, but if you can definitely go and create some averages, trend lines, so the moving averages, you'll on the chart, you will definitely see a lot of that happening too. Instead of just simply going RSI and stuff, RSI is not going to work because markets are really volatile. So it won't give you the right reading. The best reading you can give right now is through just by looking at the chart. And if you are not trained enough just by looking at the prices, you can definitely go and look at the moving averages, and they are definitely going to give you where the trend is. So if you don't want to continue, you can end your movie video here. But just for fun's sake, I'm going to go around and see where the moving averages are showing us. Okay, so let's have a look at, I think we should start from the daily, weekly. Okay, okay, let me delete some of the stuff. And so we can choose indicators. Here is moving averages. Simple moving average is fine. We can carry one. Okay, here is the moving average. We can go in this, here is city simple one. So we can go in the settings and see. Oh, it deleted it. Sorry, I deleted it. Where is the indicator once again? Moving average. All right, this is the settings. Okay, so precision inputs length is 9. Okay, the other. Okay, this is a very short term. Okay, let's create it a large one now. Let's convert this into large one, and then we can draw the other one. So let's call it 49, just for fun's sake. So this is the slow moving average right now. We need to change the color of it so we can see where exactly is it. Settings, style. Okay, yeah, let's call it green. Okay, yeah, that's fine. And now we can go and create another moving average on top of it. Simple moving average, and this is slow. So if this is on a weekly time frame, and then you can clearly see, let me move this on a bit. Okay, and this on as well. So you can clearly see finding the lower end of the 49 weeks moving average. All right, 49 weeks moving average is important. You can definitely use 52 weeks. That will give you a whole year. Okay, but I just like the number. I've studied Gann a bit, and I like the way he represents. He falls in love with 7 square. Okay, so which is 49 weeks. That's nothing beyond. You can definitely go and create a 52-week average. Once again, but for me it's just, so let's call it 49. We can definitely transform this to 7 weeks. Okay, to make it even more interesting, just for fun's sake. We can go and say, so 7 and 7 square. All right, they're both, there you go. The 9 weeks were more, they were more accurate. We could find the support as well. But the long-term frame, I wanted to point toward the cross, where the cross happened. The more recent cross happened right over here. Okay, sorry, right here. The cross happened, and then price went on right over here, and then found a support here. Almost they both kissed each other and then carry on. Okay, so we are definitely, if you just look at simple moving average, we are definitely very ideal state of setup for gold just now. Prices have come back and they're retesting the longer or slower moving average on a weekly time frame. This is not even daily time frame, so we can definitely go and go play daily time frame. So basically right now we are talking a little more erratical, because this is very, it's creating a lot of noise. So if you just simply stay on the weekly time frame, you can get a read for the whole year, and it tells you not, it tells you almost has been happening in last 12 months. This is what it's telling you. Okay, and the whole trend is still positive. Nothing is uh, at the trend is telling you that something has significant has changed. All right, so let's have a look at silver and see if you can draw the same thing for silver. Let me delete that. Let me delete that. And let me delete that. So we can definitely go on a weekly time frame. It'll be more interesting to see how, where the, here is, there we go. Should we delete that? All right, just leave it, okay? Just so we can see where exactly 50% is happening right over here, okay? Let's have a quick drop of moving average. This is the small one, and we draw another one, and then we can change the settings. So right now we have two moving averages. We can definitely go this one, settings, and we can call it as 49 weeks and try it into green. Okay, so here we can see that the trend itself is, let me delete this, or maybe the trend itself is bullish still. Okay, the cross happened right over here where the the slow moving average went down and the fast moving average went up. The cross, one golden cross happened here, and from then on we haven't seen a reversal yet. So if you look at this just by the moving average, you can see that the prices haven't actually fallen close to the support line. They are very close to the lower support line. They have fallen in the band, and I think this is good enough. Okay, if you're just a regular, if you're not following Elliott wave analysis or very accurate Fibonacci or percentage divisions, let's want to go and have a look at a daily time frame and see if something happens. So daily frame is 50 days, which is hardly 2 months. Okay, 50 days, 2.5 months. That's what it is. It's not reasonable to just go and look at it. It's creating a lot of noise. You can already see it's creating a lot of noise. So I think if you can go and draw on these charts on weekly time frame, which give us study for the whole year, at least the previous 12 months, this is good enough. You can definitely join the trend, and that will be beneficial for you. Wish you good luck with your trading. Have a good one, and bye bye.